Hello, everyone. This is Kathy. Good morning. Good morning. I hope all of you had a very nice weekend and are ready for this new trading day. If you can hear my voice and see, I'm going to share my screen in just a second. Let me share my computer screen. If you can hear my voice, see my screen, please let me know in the YouTube chat or in our Ask Kathy room on Discord. All right, it seems like, hello Steve, hello Cheryl. Let me know where all of you are dialing in from. We have a quiet start for the week, so we have some time to say hello and let everyone come in. I always like to know, what are you trading? Are you trading gold, which is at a record high today? Are you trading the dollar? It could be currencies. Are you trading indices with forex? Let me know what's your favorite market to trade. This is a really good opportunity because we have a busy week and we have a lot to talk about, but so far it's a quiet start. So it's not as if we have things rocking and rolling at the onset. Hi, my friends from Europe. It's a great time of the day, right? Your afternoon in Italy and the UK. There's a lot of UK data this week that we'll talk about. I guess you're trading yen, Dimitros. You're not in Japan. Malaysia, my friends in Malaysia. Hello, good morning, everyone. Welcome to Kathy's Caffeinated Market Buzz, where we talk about what's going on in terms of price action in the markets, what the trading opportunities are, what the stories you should be watching, and just basically take a look at what is happening in the markets. And I will be joined by Boris, who will also share his thoughts on gold as well as indices, which, you know, as Wise Guy says, is moving this morning. And yes, we will be talking about dollar yen, which seems to be confounding everyone's understanding of what should be happening, because you may or may not know Japanese yields are at a 11-year high this morning. It's a big story, but it's not a big enough story to really matter to the Japanese yen, right? And we'll talk about that. But it is Japanese yen has certainly been a mover, and this week we have Japanese inflation data, so that's very, very important. We'll talk about all of that. Okay, so to start off, we do have, and I'm just going to pop this up real quick. We do have a ton of Fed speakers, and I don't know if the headlines are really coming through right now, but we have right at 8:45, so no headlines right now, but right at 8:45, which is right now, 8:45 to 10:30, we have Bostic, Barr, Waller, and Jefferson speaking. These are, they are all voting members of the FOMC. We had Powell speak on Sunday. He did not say anything market moving at all. Waller, Barr, Jefferson are all on the Fed Board of Governors, and Barr is the vice chair of supervision. So all of their comments matter, because they actually are you know, voting members of the central banks. They cast a vote on when they think the central bank, or when they think the central bank should be lowering interest rates this year. So these are the people who are in the hot seat. These are the people who make the decisions. And so any hints, any clues that we may get from them on how they are thinking, or how they are feeling about when interest rates should be cut, are important, and in many ways just as important as Fed Chair Powell, particularly since we did not get any new insight from the Fed chairman last over the weekend. So Bostic, Barr, Waller, Jefferson, they are all speaking today, and all four are voting members of the FOMC. So make sure you're watching your headlines. You know, we always say we like to watch financial juice. So actually Bostic comments did come through. So we're going to take a quick look at what he said. He said, our policy stance is restrictive. Firms tell me that the labor market is weaker than last year, but not soft. The Fed is open to all possibilities on rate path or on the economy. We still have a ways to go on inflation. Our new steady state on interest rates is likely to be higher than what people have used for the past decade. And my outlook is that inflation will continue to fall, blah, blah, blah. He is not saying anything to indicate that he is eager to lower interest rates. In fact, you know, he's saying basically the new normal, the new steady state of interest rates is higher than what many people have been used to for the past decade, which I guess for the most part is very much true. And he's saying the labor market is weakening, but not as weak as before. The risks are balanced, our policy is restrictive. Nothing he says here right now is all that dovish. But we also have, like I said, keep your eyes on the headline. It won't be till 9 until the other ones speak, until Barr and Waller speak, and then Jefferson at 10:30. But so far, Bostic hasn't said anything particularly negative, and for that reason, dollar yen is rallying. Like I said, you know, the Fed speak matters, And this is the most important thing affecting the dollar today, and in many ways affecting the FX markets in general, because we have no US data. Canadian markets are closed, and Fed speak is what we're watching. So there's absolutely no coincidence that the dollar is popping up a bit right now off of Bostic's comments, because Bostic, as I said when we kicked off, is a voting member of the FOMC, and his comments are not that cautious. And so later on today, we've got Barr, Waller, and Jefferson speaking. So keep an eye on those headlines, because with not much today on the calendar, and in fact, not much this week on the US calendar, that it is going to be Fed Insight that really drives the market's flows, because the most important event risk that we have this week for the dollar is going to be the FOMC minutes. And and it's really, the FOMC minutes are really not going to move the needle on anything, because we all know that the Fed is not going to be lowering interest rates in June or July, or at least that's where everything stands right now. Of course, things can change if we get some dramatic weakness in this month's data or next month's data, but so far there's no reason for the market to think that they're going to be lowering interest rates in June or July. So the Fed minutes, I don't think, is really going to reveal anything new, and neither is new home sales or existing home sales. So none of that, I think, is really going to be a huge market mover for the greenback, and that is why I'm neutral. You're looking at my heat map, which all of our BK members get access to, and each of these, if you click on them, provide more detail and more insight that I update on what is going on and what I feel. Now, with the dollar, there is absolutely no question that US data has taken a turn for the worse. Last week, we had retail sales basically stagnate, showing that consumer demand is becoming much more of a problem, and that going forward, it could be much more of a problem as well. Inflation slowed, not as much as it could have been, not as much as enough to really hurt the dollar. And then, of course, non-farm payrolls growth was weak, and Empire State and Philly Fed surveys were weak. And this week we have the PMIs from the U.S. From S&P, which tends to be which is not as market moving, but will probably be a little bit more dovish as well. So overall, there is a lot of reasons to believe that the U.S. economy is starting to slow. But as I said when we kicked off, we have what the Federal Reserve thinks and plans to do is hands down the most important thing and the most important driver of the US dollar. And I say this every week, which is that it's all about who's going to cut interest rates next. And the Federal Reserve is not expected to cut interest rates next. And that's why Bostic's comments this morning were so impactful, because Bostic basically made it seem like things are still going okay. And we have Barr comments coming through right now. He's talking about regulation. We'll have to see if there's anything insightful coming out of there. But Fed speak is what you're going to have to watch. Barr, Waller, Jefferson, those are all the ones that are basically, what we're watching right now. So certainly keep an eye out for that. These times must be wrong, because I'm on Eastern time right now, and Barr's comments are, I guess it is 9 o'clock, sorry. Barr's comments are coming right now. And yes, so Barr's comments are coming, Waller's comments are gonna come soon, and then, Jefferson. And once again, they're all voting members of the FOMC. So I am neutral dollars. I wanna say I'm neutral bearish, but we're gonna have to, at this point, when we don't have economic data and Fed speak completely in sync, we're just going to let the price action drive our trades. So right now we're neutral dollars, and for the most part, since we don't have too much going on, the dollar could see a little bit of a upside movement this week. Euro, I'm bearish. I'm bearish euros. Euro ECB is expected to be the next central bank to lower interest rates. As I said, it's all about who is going to move next on interest rates. and ECB is widely expected to be the next to lower interest rates. There is, and even though we've seen, stabilization in Eurozone data, we've seen stabilization in the IFO, the ZOO, and this week, the most important data this week won't be from the US, it's going to be from Europe, and then they are going to be the PMIs, the UK PMIs, the Eurozone PMIs coming out on Thursday. Those will be the most important. And I think that, we could be in a situation where the PMIs, and the market expects the PMIs to be lower. We'll look at that when we get to the calendar. So it's going to be very difficult for the euro to rally, and we'll see that in the charts. UK, it's a huge week for the UK. We have UK inflation, UK retail sales, UK PMI data. So all of that is very important. Bank of England is expected to lower interest rates in the summer. We had comments from Broadbent earlier this morning, and I'm going to flash that to you. Look at my financial juice column that I'm scrolling down. Broadbent, the BOE have said that the market seems to be underestimating the possibility of an interest rate cut. So Broadbent said, it is a matter of individual opinion how much evidence is needed. Signs of inflationary pressures are easing. The experience the past 2 years have made MPC members wary of lowering interest rates. We are not on a knife edge where any rate cut would produce above trend growth and policy would still be restrictive. Rates will be less restrictive at some point. It's possible that bank rate cut could happen this summer. I mean, basically, UK economy has suffered large shocks. They're preparing the market for an interest rate cut. And if we get a series of softer economic data this week from UK retail sales, UK PMIs, UK inflation, those are all reasons why I think this pound should weaken this week. We also have Australian PMIs. RBA, Reserve Bank of Australia, is expected to be one of the last central banks to lower interest rates this year. So, jobs data was kind of mixed. This week we have PMIs. I'm neutral Aussies because data has been mixed. But I guess I have to say I'm more neutral bearish than anything else. And for those of you that are just joining us, as I said, the Fed speak will be really key today. FOMC minutes midweek are really not going to move the needle. The issue here is that US data is deteriorating, but the Fed is resisting interest rate cuts. And for that reason, we're neutral dollars, and the dollar could potentially recover some more this week. CAD, we're bullish CAD because, IV PMI was strong. The jobs report was strong. This week we have retail sales and inflation number tomorrow, both of which could be stronger, especially since the price component of IV PMI was harder. So there's a lot going on that could be supportive of the Canadian dollar. So, I'm bullish Canadian dollars. We have a Reserve Bank of New Zealand monetary policy announcement this year. Like the RBNZ expects to be one of the last central banks to lower interest rates. But they, I think there's many reasons for them to reduce their tightening bias or drop their tightening bias or move to a more neutral or hint of the potential for an interest rate cut later this year, because data from New Zealand really has been softening. From the inflation data to the PMI numbers, they're showing signs of weakness as well. So that's a problem. The Swiss franc, we've actually seen some nice positive surprises from Switzerland and their confidence numbers, their labor market numbers, their inflation data. So I like, the Swiss franc to the upside, but, Swissy is really going to trade based upon everything else. And then, of course, there's the Japanese yen, which many of you are wondering about. I mean, yes, dollar yen, and we're going to go just to our daily chart here, which will allow us to see things a little bit better. Our daily chart still shows dollar yen above all the major moving averages, dollar yen bullish. And, why is that? Because Japanese yields dropped to the lowest level, rose to their highest level in 11 years. So, basically what I like to do sometimes is I like to take the, I think this will let me do this. Let me see. No, I don't think it's going to let me do this. I don't think it's going to let me do the spread. But just look at, I just want to show you this. This is Japanese 2-year bond yields. And Japanese 2-year bond yields are, basically the highest level in 11 years. And so that should really coincide with a significant rally in the Japanese yen. It hasn't. Part of that is because, the US yields are up, and it'll be very difficult for dollar yen to sell off if the US yields are down. And let's just take a look at this. Let me see if I can do, I don't think it's going to let me do a 1 over either. But let's put the Japanese 2-year bond yields on here, and I'm going to move this to the other scale, pin to the left, and you can see that they pretty much move. Let's see if we can get the US 10-year bond yield on here too. Okay, so the US 10-year bond yield is the blue line, and the orange line is the Japanese 2-year yields. I know they're different measures, but I don't think it really matters all that much. We can put on the Japanese 10-year yields. And let's make Japanese yields yellow again, so we see them more clearly. Okay, so let's see if we can get some sort of interesting insight. So the orange line is the yield for Japanese 10-year bonds, and the blue line is US yields. And this is a monthly chart, so the US yields still show that it's falling. I mean, this shows you that it's very difficult for dollar yen to sustain its gain. But what I want you to see is that when you have an environment here where US yields are falling and Japanese yields are rising, it is very, I mean, the market basically pays here. It's following US yields and not caring so much about the Japanese bond yields. It's a little tough to tell on this chart, but the market definitely takes its cue more from US yields than Japanese bond yields. So the fact that US 10-year yields are up today is one of the main reasons why the yen is unable to rally. Also, the Japanese Bank of Japan did not reduce JGB bond purchase last week, which could have been a signal to the market that they're trying to take steps to drive up yields, strengthen the yen. There could have been a lot of things that they could have done, but they haven't done. And until we get some some more significant drop in U.S. Treasury yields, a more sustained drop in U.S. Treasury yields, or more significant movement in action by the Japanese, the yen, investors continue to press the yen lower. But the Bank of Japan is expected to raise interest rates again in either the late summer or fall. So there is something coming. And if Japanese yields continue to press higher, I'm very, very dubious of this entire rally. So of the dollar yen rally, and I think it should roll over, but we're not going to be selling dollar yen or any of the yen pairs until we get movements into our zip sell zone. And you can see here dollar yen is very much still in our zip buy zone. We actually, in our swing trade for our BK members, sold Swiss yen on Friday and hit our first profit target. And we took another bit on our trailing stop, but now it's back in the buy zone. That's why we have a closer exit and a further exit, because you never know which one is going, whether it's going to be a big move and we're going to get a lot of opportunity there, or it's going to be a smaller move. And I just want to show you here, we went on Friday, we went short Swiss yen 171.43 off of the double zip sell signal in Swiss yen, and I gave my reasons why. This morning in the European session, Swiss yen first target was hit and the trailing stop closed at plus 49. So sometimes the market will be like this. We get the zip sell signal, we get a huge move lower, but sometimes it's just like this. And that's why I like to trade with the first target, second target for our swing trades, because you never know how much you are going to get. So now taking a look at the economic calendar, as I said, Fed speak is going to be key today, nothing else going on. We have Australian consumer confidence numbers coming out, RBA minutes coming out tonight, which will be interesting for Aussie. And then tomorrow, the calendar kicks up again. We have German inflation data, which is expected to show inflationary pressures potentially, I think, actually moving to the upside because there was a sharp rise in wholesale prices. We also have Canadian CPI, biggest report, one of the biggest reports for Canada this week. IV PMI was hotter, so that could be harder as well. A ton more Fed speak, Barkin, Waller, Williams, Bostic, Barr, lots of Fed speak there. Bailey speaking from the UK. And then, this is a big week for Fed speak, far more important than FOMC minutes, because this is, they're going to speak based upon how they feel right now, whereas the Fed minutes is basically based upon what happened at the last Fed meeting. So Fed speak will be the most important driver of US markets and the US dollar this week. We also have RBNZ rate decision, and the Reserve Bank is not expected to change interest rates, but look for a little bit more cautious guidance that could drive Kiwi lower. On Wednesday, we have UK inflation data, huge week for the UK for data. And, UK inflation is expected to slow significantly. And if that's the case, we could see a more dramatic sell-off in the British pound. We also have existing home sales from the US. Not really that important, in my opinion. But, living in New York, I can tell you that inventory is very short. Existing home sales are still flying off. Existing homes are still flying off the shelves and selling quickly. Fed minutes, as I said, far less market moving than the Fed speak. New Zealand has retail sales data, and weaker credit card spending numbers could drive retail sales lower. We also have Australian PMIs. That's going to be very important. Japanese PMIs. Inflation and PMIs are really going to be the most important pieces of data this week. Australian consumer inflation data is also very, very important. And then on Thursday, we have Eurozone PMIs, UK PMIs. You can see for the most part, the PMIs, the manufacturing PMIs was to be lower for both Germany and the Eurozone. And then services are supposed to be stronger. So we'll have to see how that fares. And then not much going on for the US. We have building permits, not really a huge market mover. S&P PMIs should be softer given the drop in Philly Fed and Empire State. Then Bostic is speaking, and then Japan's CPI. This is very important because, central bank moves interest rates based on inflation. And if inflation really drops like the market expects, 2.6 or 2.2, that is bearish for the yen, could drive dollar yen much higher if we get weaker Japanese inflation data. Then we have revisions to German GDP, not a huge market mover. UK retail sales, more weakness expected there. And then we have Canadian retail sales numbers. That could be stronger because we had good jobs number. We have durable goods orders from the US, Waller speaking. Those are important data for the US. Taking a look at the charts. First, we're going to go to dollar yen. Dollar yen, as I said, is above all of the major moving averages. US yields are up. Japanese CPI is expected to be softer. Right now, it looks like dollar yen wants to test this high here at 156.78 and probably even continue to inch higher if the Fed speak this week is positive. And then euro. Euro is kind of, you're seeing lower highs. It looks like it wants to roll over. If we drop below today's low, then we set a new daily low below 108.50. Then we're going to see a much more significant move down to 108, in my opinion. But it certainly looks like there's more pressure than momentum to the upside in euro. As for pound, we are just stagnating, consolidating, but I definitely think the risk is to the downside. For the British pound, we have a lot of potentially weak UK data. This is a very important level. Swing high here, lots of spike highs there. I think fading against this move, it's testing it. If it rejects it, we can have a big move lower. What would be even better is if it rallies above it and then drops below it, showing a failed breakout. That could be more significant. Dollar Swiss is above all the major moving averages, but I don't think it would be, it's not really looking all that strong. And it's still holding below this support resistance point. So we'll have to see how it moves. It's more consolidation than anything else to start the week. Aussie also rolling over in a more significant way. I think with Aussie, there's a much greater chance that we're going to see some weakness in Aussie this week. And also Kiwi, as I said, I think RBNZ is going to be a bit more cautious because data hasn't been great. So that could lead to more weakness in the Kiwi dollar. And then dollar CAD, oil prices today are lower, and dollar CAD is showing a little bit of signs of stabilization. Positive CAD data CAD does move more based upon market's appetite for dollars, but we don't have much US data this week. What I think is going to happen is we may get a little bit of a rally, and if we get a little bit of rally and get some weaker data, that could lead to a bit more of a decline in dollar CAD. So that's basically what I'm looking for. Boris, I'm sure, as guys' view on gold. Gold hit a fresh record high today on Iran news, the president dying in a helicopter crash. We have a flame out, which means that that high is not being held. And so we may actually get a reversal. This is a perfect time for Boris to come in to share his thoughts on gold and how he will be trading it today. Boris, you want to say hello?
Hi, guys. Hi. Give me just 1 sec. Let me just come up on webcam for a second. Okay, let me see if you guys see me on webcam. Are we good?
We do not see you yet.
Okay, should be
on
coming
the webcam.
Coming up.
Nope, I don't see you. Do you guys see him? You want to say yes, Boris? Otherwise, oh, there you go. I see you.
Okay. All right, cool. All right, first of all, I'm going to just put in my links.
Oh, Boris, maybe you want to I'll put in the link for the futures course. You have a futures trading course beginning this week, right?
I do. If you could put that, that would be awesome. I'm just
will.
putting in, right now, I'm actually putting in my links to my live trading tomorrow and Wednesday, so that everybody should be aware of those. Let me just get that 1 second out of the way. And I'm going to talk to you because I'm going to show you my live trading today. And this is going to be hopefully the reason why you guys are going to come see live trading with me tomorrow. Let me just get my charts all in order here. Okay, let's look at gold. Hang on, let me just take the control of the screen here.
Yeah, Boris's futures trading bootcamp begins on Thursday. And so for those of you that are interested in trading futures, he's got a bootcamp 4-week course. It's fabulous. We had a huge discount that expired on midnight, but just for you guys today, we're going to extend the discount and just for today. So make sure you sign up in the next few hours.
Exactly. You can thank the boss because she's extending the discount for you guys. So the futures course, just to let you guys know, it'll be a 4-week boot camp. It's going to talk to you in depth about what futures are, how to trade them, understand the instruments. Going to talk obviously about gold, talk about indices, talk about commodities, even all the more nuanced things that people don't quite, even talk about how you can trade currencies on futures and show you some of those things. And then we're also going to get into the most important part, which is the futures trading platforms, which many people are very unfamiliar with. I'm going to walk you through, hold your hand through Trade-Evade, through TradingView, and through NinjaTrader. And that's going to hopefully really give you a very, very strong foundation. The course is going to be fully recorded and archived forever. So once you sign up and you want to review the basic walkthroughs, the basic functionalities of everything that I'm going to show you, it's going to be very, very cool. You guys are going to be able to have this on demand anytime you want. Now, the story of the day today, of course, is gold. Some of you may have seen my less than politically correct tweet earlier today that if you ain't trading gold, you ain't trading S, because that's truly the mover of the day today. But what I wanted to show you today is whether it goes up or down. And actually, when I started at 4 o'clock in the morning, gold was just nothing but up. And then if you notice, it hit the high at 24.50 at 5 o'clock in the morning, and then it's just been doing nothing but going down. And the new scalping methodology that we use in BK every single day to basically help us trade our personal accounts and help us pass the prop tests has just been monster at picking every one of these terms. Today, I'm not exaggerating. As a matter of fact, while Kay was talking, I put on even one more trade just to kind of put the cherry on the icing. You can see here, winner here to the buy side, winner here to the sell side, winner here to the sell side. 1, 2, 3, 4, 5, 6, 7. 7 winning trades. Why? Because I focused on the setup. I'm going to talk about this tomorrow with you guys in more detail, but basically there are no good or bad trades. There's only correct trades. And as long as you start making correct trades, you in the long run are going to be very successful. So I'm going to try to teach you the methodology of how to make the correct trades on the scalp side. With gold, I also even did a little bit of S&P today. Now, from a fund point of view, from a investment point of view, gold is really the Teflon instrument today. It's the Teflon trade for the year 2024. And let me explain to you why. If we're in a risk-on environment, the risk-on environment generally means loose monetary.
Forrest, I'm so sorry about that. If you don't mind, I love what you're saying right now, so I want you to start. Bull gold is the Teflon trade. Hold on, I'm just gonna pop my recording up. Just give me 1 second.
If you're gonna record, I'm gonna take the gum out of my mouth then. Okay, you got it.
Okay, 1, 2, 3, go.
Okay, so gold is the Teflon trade for 2024, in my opinion. It's going to succeed if we have a risk-on environment, and it's going to succeed even if we have a risk-off environment. Let me explain.
I'm so sorry. Okay, go ahead. Okay.
Let me try it again. Sorry, guys. We're going to just do this one more time. So again, gold is a Teflon trade in 2024, in my opinion. It will rally even when we have risk-on flows and rally when we have risk-off flows. And let me explain to you why. When monetary policy is loose and we have risk-on flows, that generally means the central banks, especially most importantly the Fed, is going to be in easing territory and interest rates go down. Now, because gold doesn't have a yield to its instrument, anytime interest rates go down, it actually makes gold appreciate because gold is a non-yielding instrument. So anytime you have a loose monetary policy, it's actually net positive for gold. And if the Fed does lower rates, as at least once, perhaps maybe twice, as the market is anticipating, should be very bullish for us for the rest of the year and could take us all the way up to 2,500, maybe even beyond, just on those flows. However, this is the beautiful part about the instrument. It's kind of a Terminator trade that always comes back. And the reason why is because in addition to obviously being a risk-on trade right now, it is also becoming the predominant risk-off asset. People are getting very concerned about all the geopolitical risk. I don't have to explain to you the enormous amount of pressure that's building up in the Middle East right now, especially with the situation in Iran that has become far less stable in the last 24 hours than we could possibly imagine, with the president and the foreign minister both dying in a helicopter crash. There's clearly going to be some sort of a power struggle in Iran between the son of the current Ayatollah and some of the other rulers. The Iranian people despise their government. I don't know if you saw the pictures yesterday from Twitter, but we had fireworks in Tehran on very few times have you seen where a leader of the country dies and people are celebrating. But that's what's going on in Iran. So there's every possibility here. We might have a civil war uprising. We might have very, very tense situation. And of course, one of the ways that Iran reacts to kind of an internal stress is by externally lashing out at Israel. They've already made sorties towards Israel about a month ago. If they do some kind of an attack on Israel as a response to this, anything goes. And all of that is being reflected very clearly in gold. There just seems to be an unyielding bid in gold as a result of the fact that almost every investor in the world is looking at the situation right now and begins to fear some sort of a very significant geopolitical risk, and that is, of course, the safety asset. So on the one hand, gold acts as a risk-on asset when monetary policy becomes loose. On the other hand, it becomes truly a safe haven bid if we get any kind of geopolitical risk, and that's why it just seems to be such a strong trade. That's why I'm calling it the Teflon trade for 2024 this year, simply because there just seems to be no way this thing goes down one way or the other. And every time it comes down, it just gets bid up. We hit highs at 24.50, and of course the next big level, everybody be watching, because I think this will be the level where the media, the mass media, is going to start to really print and make the general public become aware of it if we break the 2,500 level. It's a very big number. It's a round number. And once that number breaks to the high, you're going to start seeing perhaps non-financial magazines like Time or even The Economist start printing headlines saying, is gold is it going to the moon? And as you can see right now on my indicator, it's definitely showing some moonshot trades. So whether you're trading it on a 1 minute chart like I do, or you're doing some long-term trades, there's clearly enormous amount of opportunities in gold. We're going to be trading it live tomorrow. Absolutely come visit me. I put the links in the description. I will show you step by step exactly how we time these turns on the 1 minute chart, and basically bang, seven ticks every single time. Today I'm up 50 ticks, which is $500+ on the normal one single gold contract. It could, it could be 5,000 if you were trading 10 contracts at a time. So very excited. I'm very excited that we have some nice movements. That is definitely the market to play these days. Equities are much more quieter today. We don't have. Let me see what's going on in equities here. Let me just move this out of the way. Equities are, yes, 6 basis points, 12 basis points, not much going on. The rates are flat. Markets are in a kind of a digestive mood. I think when it comes to equities, of course, the big look this week is going to be NVIDIA earnings. Everybody is just focused on that. NVIDIA has become the bellwether of the market. Is AI the salvation of the market? That's really going to be the story this week. If they beat, you're probably going to have fresh equity highs going higher. If they don't, we might have a relatively decent sized correction because we've had such strong equity flows that we certainly do for a pullback. So we'll see how it plays out. But for now, it's steady as she goes for all the markets. I'm going to see everybody trading live with me at 9:30, and I'll see everybody on YouTube 9:15 tomorrow. We're going to trade gold. We're going to trade NASDAQ. We're going to trade the S&P. I'm going to show you exactly how we scalp this tick by tick and try to make consistent money every single day. Everybody have a wonderful, wonderful time. Be sure, if you're really interested in learning the mechanics of futures and the basics of all the key futures platforms, so you become a kind of a futures trading pro, or at least a well-knowledgeable, well-prepared trader, come join me for my futures course. The link is in the comments, as Kathy had put it down. I lock it down. It's the last day you're going to be able to do it because we start on Thursday. Okay? Everybody have a wonderful, wonderful day. I'll see everybody later. Take care.